Are you wondering what are the 4 things to consider before you invest? Well, guess what? That's what we're gonna talk about today. Because by the end of this video, you're gonna know exactly what to do, and I will even share with you a pro tip so you are ready to take your investing to new heights. All right, number 1, this might sound obvious to you, but do you have any money? Because if you don't, that's a great place to start. Hopefully you've got a job. You don't have a job, get a job, loser. No, I'm just kidding. You're not a loser if you don't have a job. But definitely having a steady stream of income will help you a lot, right? Do you have money? Now, everyone will say it takes money to make money, right? And there's some truth to that, but that's not always true. For example, when you're in high school and you're flat broke and you're getting your first job, did you have to go to your employer and say, hey, can I pay you some money so then you'll pay me some money back on this job? No, of course not, right? You said, hey, I'm gonna give you my time and my labor so then you pay me back money. That is an important thing to remember because it did not take money to make money. All of us started without money, unless you're one of those people born with a little silver spoon in their mouth, I don't know. But unless you were a little trust fund baby, all of us started the same place, broke, but we still had to get more money. So start there. Start figuring out what can I do to generate more income now so I have more money to save. Here's a bonus tip. Start by being very, very consciously aware of your expenses, right? Be aware of your income that you're earning, but also be aware of your expenses. Don't blow every dollar that you make, because if you want to really start to invest and have some real fun, it requires you to start saving money. I don't say that you have to live in a cardboard box. I'm not saying that at all. What I'm saying is be wise with your money, be a wise steward, and put that money away, even if it's starting with just a few bucks a month, a few bucks a week even. You can even just generally have it coming out of your bank account automatically. You can set automatic payments coming out of your account to start building up that investment fund. So start there. Here's another little bonus tip I'm going to give you here. If you want to make more money, including your income, not just from investing, but actually more money at your job or with your business, understand this key principle. You remember nothing else, this will make you more money than anything else I say in this video. I probably should save it to the end. Oh well, I'm giving it to you now. It's this: dollars follow value. Dollars follow value that you create for other people. If you want to make more money at your job, figure out how you can deliver more value for your employer. How can you create that win-win? How can you help them out? Help them get their goals. Help that business grow. Help that business become better. Help alleviate your manager's stresses so that they have to pay you more money. If they don't pay you more money, they know they're going to lose you to somebody else that will pay you more money because you are amazing. Because right now, rampant in the world, people are absolutely entitled. They have this major entitlement mentality thinking, I don't get paid enough, I need bigger minimum wage. By the way, only 1% of the population actually gets paid minimum wage. But again, there's a lot of entitled, whiny people out there. Do you think employers are tired of that? How would it be for that employer to hear somebody say, you know what, I'm coming to you because I wanna know, what can I do to earn a raise? What can I do to create value for you or this company that will get me a raise? Right? And I don't care if it's a restaurant business, right? Ask them, what can I do? Just so you know, I had one client who did this. This client actually went to, this is a very big, large bank that everybody's heard of. I won't say the name of the bank. There was 100 people competing for a job that had only 2 positions open. Now, he wasn't the most talented guy in that office. There was other guys that were better salespeople than he was. But he went to his employer, he said, guys, what can I do to earn this raise? And they said, 1, sell more, and specifically sell more of this kind of product. So I told this guy, I said, listen, go and you spend the next 3 weeks and you just work your tail off and do what they said. Guess what? The next month, they called him into the office and says, congratulations, you were one of the 2 people out of over 100 candidates that got this promotion. They said, you know why you got it? You were the only one that actually asked us what you could do to earn that position. That impressed us. Even though you weren't the most talented salesperson, we gave it to you specifically because of that reason. Guys, dollars follow value. This works. So the key is, if you want to take your investing to new heights, get more money. If you don't have money right now, that's your first thing, is find ways to earn more money. Start building that up. Start saving and putting it away. And don't even worry about investing until you got at least minimum $25,000, $50,000 before you even worry about it. Build up that savings, build up your emergency fund, build it up, but you focus on creating more income right now. Another story, this is a key one right here. I had a client who actually was a chiropractor out in New York State. Great guy, $60,000 a year was what he's pulling in, which for New York State means you're broke, right? But I said, listen, your number one investment is focusing on your business. He went and did that, and you know what happened next? Not only did he grow his business, but his income within 3 years went to $300,000 a year. What I think is amazing about that is because now he had so much more money, he was able to live off of less anyways, so he's able to pack away a ton of money to start investing. He was actually able to create more income than the people I was working with that already had money in savings, because he far surpassed them on the income side, allowing him to invest more quickly. That is the number one key. So get more money right away. All right, number 2. I know I just gave you a ton of bonuses. This probably feels like number 5, but really this is the number 2 point I have for you. Is once you start building up the savings, or while you're building up the savings, or if you have the savings already, start using this right now, is get more education. Start studying about investing. Don't just jump in not knowing what to do. This is what most people do. It's an amateur mistake, and this is why people have this rubber band effect with their money, right? When they try to invest, they really just gamble. They just gamble their money away. They grow their money. They're like, yes, I got some money and I'm going to throw it in this thing because it's going to make me lots of money. And they don't know what they're doing. The next thing they know, their savings goes from this to this, or sometimes to this. Big fat goose egg, 0, because they lost everything. I remember I had a client that was a stock coaching student, and this person wanted to just make money fast. Now, he didn't get the education first. He wanted to just go invest in the stock market right away. And he even bought what are called options, which are even riskier than stocks. Now, they also can make a lot more money, but he was taking big risks, didn't study or educate himself well enough. In 1 week, he lost 90% of his money. I thought this guy was gonna be suicidal. I mean, this guy was so depressed, so down on his luck because he just jumped the gun and just tried to make money fast. I'll tell you though, after that experience, he was a much better student. He made sure that he learned it, he knew it, and he started to build that account back up again. You should not have to lose 90% or 100% of your money to learn this lesson. Start to study and educate yourself. I recommend books like Rich Dad, Poor Dad by Robert Kiyosaki. Great place to start expanding your mind better. If you're trying to study more on real estate, get real estate books. If you want to study more about investing in stocks or really gambling in stocks, but you can do that, there's books on that. Get studying on that topic. Find the best person. Find the podcast. Hey, we got a podcast, by the way, Money Ripples Podcast. Ding! We got that. You can start studying and educating yourself on these topics while you're building your savings, or if you have savings, before you just go and invest it. Now, number 3, this is a key one, and you gotta be careful with this, is using debt. You can use debt to your advantage. But here's my disclaimer. If you are a spender, like you need Spendaholics Anonymous, you should not be using debt ever. In fact, erase this one from your database, right? This is not an option for you. But if you're someone who's a saver or you're a much more wise steward, I would say not even just the ultimate penny pinching saver. I mean someone who's actually a wise steward of their money, debt can be a great tool to use. I ideally would say if you're gonna use debt, usually it's gonna be like home equity. I don't recommend using credit cards, although that's an option. I don't recommend pulling money out of your car. If you have a paid off car, you can pull money out of that. But again, you gotta be careful. Here's the key thing you wanna remember. If you're gonna invest with that debt, the investment needs to pay for that debt. I don't just mean pay for the interest. That's one option. I mean that it's making more in cash flow than the monthly payment on that debt. So for example, if you get a debt and that costs you $1,000 a month, that investment better pay you more than $1,000 a month. And it better not be a speculative investment where it may or may not make $1,000. You want something that's much better. This is things like real estate, for example. Many times I have clients that say, well, I'm nervous about using debt from my home, using the equity from my home to invest. I said, well, if you're gonna use equity from your home to invest, why not put that equity into equity in other homes, right? Like to like, real estate to real estate. Great, if you're gonna use it, put it into something like that where you actually have real assets, not gambling in your digital currencies, your Bitcoin, or put it into stocks that could tank at any moment and you can do nothing about it. Put it into a place where it's more stable, right? That's a place you can use debt to take it to new heights. I had a client actually recently that took $250,000 of their debt, was able to invest it. Now it did cost them a little bit. This person, they actually added another about $500 a month on their payment. It wasn't horrible, but it added another $500 a month. Well, they took that $500 a month, but that $250,000 now made them over $2,000 a month. That right there means they made about over $1,500 a month with nothing. I mean, essentially that's an infinite rate of return because it wasn't even their money. They just used equity from the bank and used that money to make money for them. That's a perfect example. Another example, like in my own business, I borrowed $25,000 from the bank, but it only cost me $130 a month. I was able to make over $1,000 a month easily right off the bat in my business with that 25 grand. That's a no-brainer. Where it doesn't work is like when people try to borrow from their 401k saying, hey, I can use my 401k. They borrow $50,000, but then their paycheck, it's requiring to pull out $900 a month. Now, if you pull out $50,000 and it only makes you say $400 a month, but you gotta pay $900 a month back to your employer, back to your 401k plan, you're losing $500 a month. That can create a lot of stress. That makes you more paycheck to paycheck, not more free. All right, and then number 4 is where are you saving your money? The key is save it somewhere that's safe. I recommend infinite banking is a great way to do it. You can use life insurance to start building up that savings. It could just be a simple savings account too. That's whatever you're doing, make sure you do it on a regular basis. So really recap, 1, do you have money? If not, get a job. 2, make sure you build that education, really study and understand investing before you get into it. 3, look at your options for debt. And then 4, make sure you're saving your money in a good place where you're not gonna lose it. Now, if you thought this video was great, check out my next video about how to make $5,000 a month in passive income right now.